Hello my beautiful people, welcome to my YouTube channel. In today's video I'm going to continue from where I stopped yesterday. That is, I'm going to give the purpose of a bank reconciliation statement and the reasons why there are always discrepancies between the bank statement and the bank account. So stay tuned. The next step is to talk about the importance of a bank reconciliation statement. The first importance is that this bank reconciliation statement, it makes both organizations to keep their records accurately. That is to ensure accuracy in keeping transactions. It also helps to dictate frauds and errors. There are genuine errors that can be committed by the accountants, the cashiers. So this bank reconciliation helps to verify if the cashier actually committed an error or the accountant committed an error. Of course, it will not be a coincidence that the accountant in the enterprise keeps records something wrongly and the cashier in the bank records that same thing wrongly. It is impossible unless the two of them are working together. And now this is where fraud comes in. It will help to dictate fraud. So if they are committing fraud, if they are dealing with figures, the bank reconciliation statement is going to come in to verify, to see if anything is happening. It also helps in cash flow management. That is ensuring that there should be cash available, especially in the bank. It helps the bank to make sure that there is cash available in such a way that they can, if the customer comes in to withdraw cash, they will be able to have cash to give. Or if there are people needing loan, there are also so many reasons why there will be discrepancies, that there will be differences in these two organizations. That is, in the account kept by the bank, which is the bank statement, and the account kept by the enterprise, which is the bank account. The first reason is time, the time differences. With the time differences, you will see that the first problem under time differences is unpresented checks. That is, checks that have been issued and the checks have not yet been presented into the bank. So because of that, these checks will not be recorded in the bank account, actually recorded in the bank statement. Of course, the enterprise will account for those checks, but the bank will not have the transaction recorded. Then we also have checks deposited but not yet cleared. These are checks that are deposited in the bank, but the bank is going to take a longer period to do their paperwork. Because of that, it will take time. Since they have already recorded that they have deposited a check, the enterprise will record that these checks, we have deposited these checks, but the bank statement will not have that. Then the next one, we have bank transactions that are not recorded in the bank account. The first one is bank charges. These bank charges are charges that these are charges charged by the bank to an account holder. For instance, we take like the current account. Remember, the current account, it is the customer, that's the bank holder that pays, who pays charges to the bank. So because of that, the bank may record for the charges at the end of the period, but has not yet sent an advice to the customer or to the account holder, informing the account holder that this certain sum of money has been deducted from the account, and we have already recorded that. Since they have not yet, the enterprise has not yet received an advice, they will not account for it. It is going to appear only in the bank statement. An advice is it's a document sent by the bank informing the account holder that his or her account has either been credited or debited. That means it has either been increased or decreased. Then we have the next one, we have fines and interest. Fines or penalties. Maybe if the enterprise have default payment, like in the case of a loan, if they have taken a loan and they have not paid regularly, they have not carried out their repayments regularly, you will see that the bank is going to fine them and is going to decrease their amount in the bank. Because of that, the bank statement is going to show this, but the enterprise is not going to account for it. They will also have interest received. Savings account, deposit account, of course, they yield interest to the account holders. So when the time is due, the bank will account for the interest. Since they have not yet sent an advice to the enterprise will not actually account for the interest, thereby causing a difference in the recording. Then we also have direct deposit by customers. That is when the customers that record directly into the enterprise's bank account in the bank. You will see that the bank will record that transaction. Since the enterprise has not yet received an advice that your account has been increased by this amount, the enterprise will not obviously see that account, thereby causing a difference. We also have genuine errors. Errors like in a case where the enterprise deposits 550,000 and the enterprise records it as 550,000, but the bank records as 55,000. That's just a genuine error.
Thank you for watching, and please stay tuned for the practical part of the bank reconciliation statement.